Hello, all the CA into students. Now, in this video, fatafat we are going to revise very quickly to very important concepts in capital gains, which is very easy, just a remembrance. But please don't neglect. One is the tax rates of capital gains, and second one will be cost of acquisition in special cases. Okay, very short video. Let's quickly complete everything such that you don't leave this area. Exam you will do it right. Okay, point number one. Section number 112A, tax on long-term capital gain on certain assets. So 112A is a bigger number than 111. It's long term. 111 is a short term. So that way at least you remember. So section number 112A, tax on long-term capital gain of certain assets. Long-term capital gain on transfer of equity shares. Number one, equity-oriented units. Number two, and units of business trust. Business trust anyway, interlevel you need not study. Just remember equity shares or units of equity-oriented fund. The following is the tax rate. If the transfer took place before 23rd July 2024, remember the date, before 23/7/2024, if the transfer took place, then 10% is the long-term capital gain rate on that particular capital gain. If transfer took place on or after that, the rate will be 12.5%. 12.5%. So if the transfer took place before 23 July, 10%. If the transfer took place after 23rd of July, it will be 12.5% on or after. Next, and very important, no capital gain tax at all. If the aggregate capital gain on all these things is not exceeding rupees 1,25,000. Okay, if that is not exceeding 1 lakh, once upon a time it is 1 lakh, now it is 1,25,000. The above tax rate shall apply if. So these lower tax rates of 10 and 12.5 will apply if STT is paid on acquisition and transfer in case of equity shares. Okay, in case of equity oriented funds and units of business trust, at the time of transfer, if you pay, it is enough. Okay, next. LTCG arising from transaction in a recognized stock exchange located in IFSC, International Financial Service Centers in Gandhinagar in Gujarat, would be taxable at the rate of 10% or 12.5% provided consideration is received in foreign currency even though STT is not paid. In simple language, remember, STT not paid, now this concessional 10%, 12% will not apply. Okay, will not apply. So higher rates will get applied. But if it is a IFSC, if it is a IFSC located in a IFSC, if any company which is located in IFSC does the transaction, and if they received the consideration in foreign currency, no problem, 10%, 12.5% concessional rates will apply, even though STT is not paid. And whenever short-term capital, long-term capital gain under 112A is covered, you should not consider at all the deductions. Means what? The deductions claim will not be available. Okay, next. Long-term capital gain on 111A. Okay, tax on short-term capital gain on certain assets. Same, equity shares, equity-oriented units, and units of business trust. Short-term capital gain. If the transfer took place before and on or after, same thing, 15% and 20%. But that concept of 1,25,000 will not apply here. From very 1 rupee, taxation will start. Same concept again. Next. Capital gain on other than A and B means other than that anything, any kind of capital gain. Okay, whether short term or whether long term, anything. Same, transfer took place before or after 23rd July. LTCG will be 20% normal slab rates. And here LTCG 12.5 normal slab rates. Okay. But very important is dispensation of indexation benefits with effect from 23rd July. Means if the transfer took place on or after 23rd of July 2024, indexation benefit will not be given. Gone. Now today also indexation benefit is not available. Since the transaction of transfer happens after 23rd of July, on or after 23rd July, indexation is not available. Okay. What is indexation? Indexation, you know, na? Whenever you take cost of acquisition, instead of cost of acquisition, we will take indexed cost of acquisition. How it will apply that? Indexed cost of acquisition is always a benefit to assessee, because when the cost of acquisition is more, capital gain will be less, tax burden will be less. Correct? So cost of acquisition is, say for example, 1 lakh. This was acquired in 2005 year, but we are in 2024. Applying inflation, the 1 lakh value in 2005 will not be 1 lakh in 2024, it will be more than that. So a concept of indexation. So how to do indexation? Cost of acquisition into CII, cost inflation index, in the year of transfer. until this year or whatever the year they give, divided by indexation in the year in which it was first held by the assessee, or 2001 to year, whichever is later. For example, I acquired in the year 1998. On the for the 1998 CIA is not available. Therefore, 2001 to year ki whatever the CIA is there, we will take that. Or 2007 lo you acquired. 7 is later than 2001 to so that 2007-8 year ki whatever CII is available, that you will take. So cost of acquisition into CII in the year of transfer divided by CII in the year in which it was first held by the assessee, or 2001 to whichever is later. So if this indexation benefit you take, na, cost of acquisition will be more, then capital gain will be less. If that benefit you take, then that benefit is available prior to 23rd July. That's why tax rate is 20%. That particular rate is, that particular amount is, that indexation benefit is gone. So that benefit is taken from the assessee. Therefore, they reduced the rate from 20% to 12.5%. So dispensation of indexation benefit applicable for resident individual and HAF. Okay, applicable for resident individual and HAF. If resident individual or HAF transfer any immovable property acquired before 23rd July 2024, then the assessee has two options. See, I have acquired my immovable property to 2012-13 year acquired, which is before 23rd July na acquired. Transfer anyway will be made. Then assessee has two options. Even now, even if the transfer is made after 23rd July, assessee was given two options: with indexation, without indexation. With indexation at 20%, without indexation at 12.5, whichever is more beneficial. But this is applicable only to whom? This is applicable only for individual and HUF who are residents. Transferred any immovable property after 23rd July, but acquired before 23rd July. Then indexation benefit is still available on that particular immovable property. No problem. Indexation benefit you can take, but with indexation 20, without indexation 12.5%. Okay. Next, indexation also covered. So main important things are 2001 to year indexation is 100, 24-25 year K 363, 25-26 year K 376. Now let us move on into one very important concept. See here. Normally, whenever you acquire equity shares, equity shares value will be taken, the cost of acquisition will be taken as the cost at which you acquired. Okay. So, but if the equity shares or units of equity oriented fund or units of business trust which are acquired before 1 to 2018, remember carefully, before 1 to 2018 they are acquired, transferred on or after 1/4/2018, 1/4, not 1/2, acquired before 1 to 2018 but transferred on or after 1/4/2018. In that case, what will be the cost of acquisition? It's not general cost of acquisition you made, it will be separate. Cost of acquisition of specified asset means whether it is equity shares or equity oriented fund or any kind of units of business trust. Okay, cost of acquisition of that specified asset or qualifying amount, whichever is higher, will be taken as a cost of acquisition, not the actual cost of acquisition. It will be the cost of acquisition actually or a qualifying amount, whichever is higher. What is the qualifying amount? Qualifying amount will be fair market value as on 31/3, one day before this, 31/1/2018. Fair market value as on 31/1/2018 or actual sale or full value of consideration, whatever you need to consider. Actual sale value of full value of consideration. Okay, full value of consider sale value, whatever is going on, full value consideration, whichever is lower. So fair market value or sale or FVOC, whichever is lower, you need to take. This is called as a qualifying amount. This qualifying amount you need to compare with the cost of acquisition of your specified asset, whichever is higher has to be considered. Now situation. What do you mean by FMV as on 1/3/2018? How to compute FMV? Okay, let's go. Situations. If the units are listed on recognized stock exchange, if units are listed on recognized stock exchange as on 31/1/2018, okay, so you may get a doubt, only units are applicable. No, actually I have written units, it is not just units here, units are even shares. Okay, including shares. So if the units listed or the shares are listed on recognized stock exchange as on 31/3/2018, then how much to take? FMV will be the highest price quoted on 31/1/2018. If it is not traded on 31/3/2018, before date, last trading session, whatever the highest price is there, that one you need to consider. That one you need to what? Consider. Okay, now let us understand this. Cost of acquisition of equity shares and equity oriented funds and units of business trust. If they are acquired before 1/2/2018 and sold or transferred after on or after 1/4/2018, in such case, the cost of acquisition is not your actual cost. It is actual cost of acquisition or a qualifying amount, whichever is higher. What is the qualifying amount? FMV as on 31/1/2018, or the sale value, the full value of consideration, whichever is lower. Okay, these all information they will give in question. You need to know how to apply this. That's it. If the what is the FMV? How to compute FMV? If units are listed, units or shares are listed on recognized stock exchange, then FMV will be the highest price quoted on recognized stock exchange as on 31/1/2018. If it is not traded on the day, last trading session. Next one. If the units or shares are not listed, if the units or shares, anything, include shares. Okay, if they are not listed, if there are units, NAV as on 31/1/2018, you need to consider. Shares, anyway, they are not giving at CA interlevel. Mainly, you need to know about the units. Units of business trust, then NAV as on 31/1/2018. Mainly, you have to remember for the listed case. If the shares are, units are listed as on 31/1/2018, FMV will be the highest price quoted. So, that highest price quoted and ongoing sale value at that time, whichever is lower, compare it with your cost of acquisition, whichever is higher. Okay, whichever is higher, whatever the higher amount come, that will be considered as a cost of acquisition. Next, other cases of cost of acquisition. Which case? Other case. Okay, intangible assets. Any intangible asset, goodwill, trademark, copyright, brands, right to manufacture, produce, loom hours, tenancy rights, any kind of intangible asset. If it is self-generated, cost of acquisition is nil. If it is purchased, cost of acquisition will be the purchase price. Next, bonus shares. If it is acquired before 1/4/2001, very important, market important for coming exam. If the bonus shares are acquired, means the allotment happens before 1/4/2001. Before 1/4/2001 means before even the indexation starts. So FMV as on 1/4/2001 will be considered as the cost of acquisition. So generally bonus shares has no cost of acquisition, but if it is acquired before 1/4/2001, cost of acquisition will be the FMV as on 1/4/2001. Next, acquired on or after 1/4/2001. If it is acquired after, it is nil. Rights shares. Rights shares means a price which is less than market price, they will sell. So if acquired by the shareholder directly, cost of acquisition will be the amount paid to the company, which we also call in FM as a rights price. Okay, company market price is 500. Company announced at 420 or 430. That 430 will be taken as a cost of acquisition. But sometimes rights may not be purchased by the holder through shares. He will renounce the right. He will not sell the share. He will sell the rights. So because you did not purchase any right, company gave you free of cost because you are a shareholder, but you are selling that right to someone. So full value of consideration for announcement is the rights price, not rights share price, rights price. A right key there is a price, na? That's rights price. Cost of acquisition nil, that will be the STCG. STCG, that is okay. Period of holding starts from the offer date, rights offer date till the renouncement date. So next, renouncement, when you go do to someone, that fellow will purchase the share. To him, what is the cost of acquisition? For him, two costs should be added: rights price, the right price, and the renunciation price. Renunciation price. Rights price is the price paid by that holder to the company. Simply to tell, this rights price is for share. Is for share. Renunciation price is for transfer. Renunciation price is for transfer. So cost of acquisition will be the rights price and renunciation price together. Okay, these are certain important things. And whenever bonus shares are there, whenever bonus shares are allotted before 1/2/2018, fair market value as on 31/1/2018 will be considered. Means all this circus will not be done. Okay, this all will not be done. Equity shares, if that equity shares happen to be bonus shares, all these things you will not consider. Okay, all these things you will not consider. If the bonus shares are allotted before 1/2/2018, fair market value as on 31/1/2018 will be taken. Cost of acquisition, fair market value, sale, all these will not be there. Fair market value only will be considered. Okay, whenever I talk about shares and securities, Period of holding starts from the date of allotment till the date of transfer. That's it. Thank you.